Very warm welcome to you, Candy Lips. We have just in news, the CPI, the inflation number, has come out cooler than expected. And it's very funny because one of the leading expected indicators from one of the scum reptilian feds expected the number to go up to 3.6% and give us a very bad number. And surprise, surprise, it came down to 3%. Let's have a squint down and have a look. Wow. 3%, we were expecting 3.1, 3.2. That was from the analysts, and we came down to 3. And this is actually huge information, baby dolls. So CPI has come out at 3%. It's cooler than expected for the yearly data. The core CPI is a bit cooler too, but we still needed to come down. But this is the interesting part. The Fed rate probabilities, they are still at 95% for a rate hike in the next meeting. They are still expected to push rates to 5.5%. I have the website here, the Fed Watch tool, and you can see it's like 95% here for a rate hike. It's literally an enormous, it's pretty much priced in. The market has priced in a rate hike. And you might be sitting here scratching your head. What is going on? Well, let me tell you something, friends. This is why we are in crypto. You are my friend. You wear fluffy slippers. You enjoy having pointy elbows. And I want to tell you right now, you must, and you will, as long as you live, you will respect the S&P 500. The S&P 500 will turn you into a little bitch if you are turning your back on it, okay? Never turn your back on the S&P 500. It is the guiding star in all of markets in the world, and these are monthly candles. As you can see, for some reason, the S&P 500 is saying, you know what, we're going to give the big fat middle finger to everybody who thinks they know what they're talking about. Because when we were going down, everybody said, the Fed, recession. And then the market started going up. The S&P 500 is literally one of, if not, it is the hardest thing in the world to predict consistently. Everybody tries to predict it. Don't even waste your time because there's trillions of dollars sloshing around. All right, let's play in crypto game because you don't have to fight against $400 billion fighting you. You're only going to fight against the next person with a mental health issue who's trying to buy and sell based off fear and greed. And if you really want to know what's going on with any news, any job data, any CPI, you don't even have to interpret it yourself, friends. All you've got to do is go and type in US O2Y. And you have the United States 2-year government bond yield, and you'll be able to see what the market is really thinking. Of course, this is the monthly chart. What you should do is just go down, put on like a 4-hour or a 6-hour, and have a look at the rate. You can see it's 4.75%. Remember, I said they're expected to push the rates up to 5.5%. So the US 2-year bond, it's like the market, we are right at an inflection point. The smart money who is trying to hedge out for the future and trying to process all this information, they are saying right now, something's going to crack. The Fed has to go back. Something is going to come. We don't know when, we don't know how, but sometime in the next 24 months, we think 5.5% is too tight. That's what this yield is saying. It's 4.75%. That's a big difference. It's basically saying, it's funny, they're literally saying, okay, US Fed, you are going to hike, you are going to try flex, and then we're going to realize that you had shrivelage the whole time when you take off your pants. And then you're going to have to go back and start cutting rates again. Let me tell you something. In these inflection points, they are critical because once the equity market, the S&P 500 finally comes to the realization of what's going on, there are wild moves. And you know, it's very confusing for some people because they say, how can something crack priced in, but the S&P 500 is going up? Well, let me tell you something. The S&P 500 has the deep insider money, friends. It knows this. It prices it in. The stock market prices in this bond market. They are one and the same. And the smart money knows. They know now, one weekend, if something cracks, US Fed starts printing, baby. It's like it's daring them. It's like we have to get long, okay? But of course, what's the narrative pushed by the media right now? The narrative is recession. We can't, the Fed, inflation. It's all that scam. That's exactly what we want. But perhaps as soon as it gets everybody bullish, we start to roll over. And now we have the Bitcoin 5-minute chart just to update you, baby dolls, because you're seeing Bitcoin right now tried to fake up and then it came back down 1.6%. It's still stuck in this range. It can't leave this range, but that's probably because it's more to do with the fact that it's summer in US and we just need more time to just keep rinsing out these final last people who want to sell, people who are watching it and they're like, oh man, if we roll over, I'm really screwed. You need to get rid of those last people at the very end before we're finally able to clear on the way up. I think when we finally clear, we're never coming back to this zone. And this is the actual weekly chart right now, just to show you exactly what I mean, okay? So because we flipped green on this chart. But if we go back to the Mt. Gox Ponzi cycle, which is 2015, you can see that what Bitcoin did was it grinded along my golden ropes, okay? It grinded until it was finally ready to be done. And then around the Bitcoin halving, pop to the moon and then come back down, okay? You see this little pop to the moon and come back down? Because Bitcoin took so long to rinse out and grind and creep along that way, we never came back to ever go down ever again. That's why. If I want to show you a contrasting scenario, it was the 2019 cycle. Let me show you this. Do you see how Bitcoin, it went up, it never came back. It just went up too fast. It was the plus token Ponzi cycle. Because we went up too fast, we pay for our sins later. And unfortunately, it came in the form of a zombie virus, which capitulated everybody. But if we can go back and I can show you right now what that creeping looked like in 2015. Look at this, friends. We just go up and see we creep. Now here's the Bitcoin halving run. Pop, come back down. Look at that. Do you see that? Yay, come back down and we creep again. You see this creeping? This creeping is people constantly, they'll hit market just a little bit to buy. Weekends get out selling. We rinse them with time and then we continue on. That's why we don't know exactly what scenario we're going to get right now. You see, we just had some cool CPI. You might be thinking, hey man, last time we had cool CPI, we did a rally. We went, woohoo, went to the moon. But now we're kind of like selling off. That's why you can't trust these numbers, man. Market's smarter than me and you. There are insiders. It's like they already knew this good data was coming. They knew that 1, 2, 3 months ago. That's why we started going up here. It already priced it in. Do you understand that? You can't just look at this CPI data and think you're going to make millions of dollars. It's not that easy. We have to look to the long term. We have to delay our gratification. That's the only way to make it, as long as me and you are friends. And in the spirit of friendship, let me show you the US dollar. This is the DXY, okay? Dixie. Now, Dixie boy is the king currency. It's literally the US dollar against every single currency in the world. And you can see right now, we have big, fat, juicy, red death candles coming. Look at you go. And of course, this is what we want to see because this is seen as risk on. Because when the US dollar, the world reserve currency, starts getting weaker, it basically means that we are ready to kind of stimulate because America's now got a weaker currency. It's now boosting everything else out there. And of course, it probably also means they're going to start to weaken the currency. It's starting to price these things in. They always keep things at a fair price. Trust me, this is literally, you can't get more manipulated than this currency, the DXY. Don't even bother trying to really predict it. But what we're looking for is we want this big daddy to come down. We're like begging for it to come down. You can even see, right, I'm going to put on a weekly chart. By the way, Jim Cramer was literally bullish to the moon up here. This was the end of 2022. This was when crypto was getting squeezed by the nuts all the way up there. We want to see this big daddy come back down just to go back in the fair range. So we basically remove all the tightening. This is the best thing we want. And if you do, please, friends, please confirm friendship. And as well, don't forget, like, subscribe, press the bell button and all. You are appreciated, every single one of you. I love every single one. Thank you very much for being here. And I have this chart here for you. It's the US Core CPI. It's the monthly readings. And this is exactly what I want to show you because there's CPIs. This is what you don't know. That's why you're here. High value content. Thank you very much. CPI is they just get every single item in the index, all of them, and they put them together in the basket. So you have this cute little basket, picnic basket. They go, yay, put every item in there and let's do the average. But core CPI is what they do is they trim. They basically trim it. So what they do is they say, well, the core is removing the food. So you're minus food and minus fuel or energy, minus like this energy. And they want to be like, hey, like all the other things without the input costs, how much is it actually going up or down? So that's what they really want to see, okay? Because the food and the energy, you get different bouts of like, drought, or you have international crises you can't control. So that's what they want to see. They want to see this core CPI coming down. If this core CPI is hot, they're like, uh-oh, people are paying more for their fluffy sippers. They're paying more for their squeaky chairs. They're paying more for freshly cut watermelon jars. That's what they're paying more for. But this number has been going down. You see right here, the month-on-month reading has been, it's starting to go below the average. You know, the average would have been like here. We are starting to go below the average. That's why perhaps it's possible, right? I've seen this happen right before the FOMC, even though it's like 10 to 14 days to go. Right before FOMC, the market will just break. It will just be like, no, we can't handle a hike. It's actually fascinating to see because the market, right before the FOMC, it's like, oh, everything's cool. And then for some reason, literally, I'm not kidding, man, like 48 to 72 hours before the market, one of the bonds just goes, uh-oh, we can't handle this. And then something happens. It's some big fund, some big $1 trillion fund out there in the world. They just wake up and they're like, you know what? This economy is actually looking pretty poop. We've got to front run the Fed because there's no liquidity. And then these types of moves cause a chain reaction, and it kind of reveals a price discovery mechanism to the market, which then the Fed has to look at and go, uh-oh, we can't actually hold or hike the rates, which is what everyone expects the next move to be. It's still possible that the next move is a hold, okay? They could be just bluffing. The only issue is it's that stock market going up. That's the thing. When they saw that stock market going up, they're like, uh-oh, people's confidence is here. So you see, everything's a manipulation game, friends. That's why we're in the land of crypto. We're saying, well, if you're going to manipulate us, okay, if you are going to please manipulate us, then at least give us something that's going to go shooting up to the moon, please. That's why we're in the crypto game. And we will finish it off with the altcoin index. This is total 3. This is the market cap of altcoins, removing Bitcoin and Ethereum. Now, yes, this one includes Tether, but we'll just leave it as it is to make it clean. You see this golden box here? This is where I think the danger zone is. Why do I believe that? Firstly, confirm you got a pointy elbow or two. And secondly, confirm you got pointy knees. And thirdly, I just want you to know, every single person in crypto knows about the cycle patterns. And they know that, okay, they know because we've had a red year. We've had a red year of 2022. They've had this, okay? Now they believe strongly. They believe, okay, well, 2023 is going to finish green, okay? So let's draw this nicely. They know this has gone down, okay? They know, uh-oh, we've gone down, okay? Now they know the next year, 2023, they know it's going to finish green. They don't know how much, but it's going to finish green. Then they also know there is another green year to follow. They go, okay, January to December, another green year, okay? But here's the kicker. If too many people come and buy in this second year, which will be 2024, the Bitcoin halving year, you see this dotted line? This vertical dotted line is the Bitcoin halving. If too many people come, and what's too many people? I'll let you know, okay? I'm going to check every single person, and if they're wearing pants, that's good. But if a lot of people are not wearing pants, that's not going to be good, friends. That's going to be bad, the opposite of good. If too many people are not wearing their pants or even wearing slippers, God forbid, I'm going to have to make the captain's call and say, you know what, I'm sorry, but the majority of the crowd will then conclude that the cycle is repeating exactly the same, and they're also going to believe that the third year would be 2025. That year, they'll believe is guaranteed to be green, and they think it's a parabolic year. This is the danger zone. Now, do you see this boxy? Why do I say it's a danger zone? It's because this will be the inflection point, potentially. This will be the year where you have to decide, look at yourself in the mirror. Do you have Sultana balls, or are you drinking high protein shakes? If you are drinking high protein shakes, you're going to have to fade the crowd to survive, because 95% of the crowd are going to be saying everything's going to the moon, Bitcoin 200K, everything's absolutely sweet. 2025 is going to be the start of the bull run. It's going to be the greatest thing ever. It's going to be a continuation of 2024. But unfortunately, we're going to sit here and say, wait a minute, I've seen this before. This is exactly what happened back here. Everybody said 2021 was going to go higher and 2022 would just be a continuation of super cycle. Perhaps we are going to live the phantom ghost, right? The cursed ghost of it. So this will have to be make a captain's call. You're going to have to go through every single one of your altcoins. You just have to look at them and say, okay, 2024 has been green, but every person believes 2025 will be the greatest year ever. It will be the final big blow-off euphoria year. We have to plan for the poopy year. What if 2025 is unfortunately a pit stop year? What if instead of going up, it does something like, oh, it starts up and then, we actually go down like that. And then we start to go up in 2026 and 2027. This loop I drew would absolutely slap every single person in the face. You will have so many red cheeks. You will be begging for freshly cut watermelon pieces. That is how destroyed you are going to be. You will have no confidence at all. I know it, you know it, we all know it, because it will come to the realization that you have been waiting in crypto since 2021. It will have been 5 to 6 years and we've just gone sideways. Sideways for 5 to 6 years. Yes, it is, friends. A lot of people just came in here in March 2021. Look at this sideways. Oh my God, 1800 days. Oh my God. You're looking at this scenario. It's making you squirm right now, because it's making me squirm if this actually plays out. You got to plan for it, man. I don't want to plan for it. I hope everybody becomes a bear, because then I'll have confidence that the contrarian play is to go up. But unfortunately right now, all I'm seeing is people just get continuously more bullish and continuously raise their targets already. That's the unfortunate thing. So I could sit here and lie to you and say, yeah, everything's going to be sweet, but I'm here to be truth. I'm here to look after you. That's the truth. So it's not set in stone. These are odds, but the odds are serious. The odds of this scam used to happening, it used to be, for me, used to be about 20%. 20% of it happening. But now with BlackRock ETF, the Trojan horse, it's now, for me, 70% chance. Yes, that means 50 to 70% of my portfolio, I'm going to have to take action. I'm going to have to make a captain's call. I'm not sitting through this scam scenario with everybody in fake laser eyes, Kevin O'Leary and Michael Saylor, everyone ever again. I'm not sitting through that type of trash anymore, because the signs are clear, friends. Peter Schiff's in, for God's sake. There's literally no one left. We're getting the final suckers in. The BlackRock ETF, we're getting mum and dad retail. Think about it. We're going to be playing it month by month. As long as we got our friendship, we're going to make it. Tell mum and dad, the green box, the green question mark here, we're going to make the captain's call when it arrives. And we're going to love them no matter what. Thank you very much, friends. Like, subscribe, press the bell button, all. I'm going to catch you in the next one.